this is Linda Hitt. We're going to do the final video clip in our accounting cycle problem looking at the last step or closing entries, and we're going to focus in on a manual system. Basically, these are entries, they're journal entries done at the very end of the accounting period, which is usually a 12-month period. The purpose of these entries is to wipe the slate clean for temporary accounts so we can start all over again next year doing an income statement. And if we don't close the books, the retained earnings balance does not update. So it's important to have that so we can balance the balance sheet. We don't ever want 13-month or 14-month income statements, and we certainly need the statements balance sheet to balance. So without closings in a manual system, there are certainly problems that we have to deal with. The basic process of closing is really not that long or complicated. You're doing the opposite of whatever the balance is for those temporary accounts. So revenues normally have credit balances. To do the opposite, you're going to debit them, and when we get to the ledger, we'll see that account balance becomes zero. The rest of the story, the rest of the entry is always retained earnings. And then we'll take the expense and the dividend accounts, which usually have debit balances, and we'll do the opposite of that. So we'll credit those accounts. When posted to a ledger, we'll make those accounts zero, and then retained earnings will go down for expenses and dividends, and of course retained earnings goes up for revenues. So we'll journalize, we'll post to the ledger, same journals we used before, same ledger, and once the balances are complete in the ledger, we'll do one final trial balance to make sure everything balances. Okay. We are ready to look at our accounting problem once again. Let me see if I can minimize, whoops, that. Okay, here's the numbers. You might remember them from the previous clips. Here's the adjusted trial. We've, of course, done all the other steps, including the financial statement. So now we're going to do the closings, which will be dated at the very end of the period. And there's a couple ways to close the books, but you'll notice we organize the trial balance, so the bottom half are the temporary accounts. And you can see retained earnings is zero. We haven't used it because we're a brand new company. We have not closed the books before. So we'll start with revenue, and I will type in revenue first because we're going to debit it for the balance, 6383. Whoops. And we're going to credit retained earnings for 6383. In a minute we'll see the posting process and how that zeroes out the revenue account. And then I'm going to do them one by one. You can see all of your expense accounts have debit balances and the dividends as well. So each one of those accounts will be credited. The beginning part of the entry then would be to debit retained earnings and credit the appropriate expense account. So salaries is $1,800. We'll credit salaries expense for $1,800. And of course, we're only closing temporary, so don't get carried away and close out liabilities. Be nice if we could. Okay, we debit retained earnings for $100. This has to do with insurance expense. And then we go on to the next expense account, which is supplies. So we're going to credit supplies for the balance. And then we're down to what? Interest expense. So interest has a $100 balance. So we'll close out interest expense for $100. I'm sorry, it's $10. So let me take off a zero there. And then we're down to rent expense. So we're going to reduce retained earnings for that, credit rent expense, and then last but not least, we're going to close out the dividends. So we'll also reduce retained earnings. Don't worry about the typos. And there's the 400. So hopefully we've closed each individual expense account the revenue account. So we got 1, 2, 3, 4, 5, 6, 7. 1, 2, 3, 4, 5, 6, 7. Okay, we would then take this information and we would post it to the ledger. So I'm going to scroll up and I'm going to show you another way of writing the closings, a little bit shorter. You can combine all your revenue closings in one entry, which not much different than what we did. But look what you can do with your expense entries. You can actually put them together so that you have one debit to retained earnings for total expenses, and then each individual expense account is credited. You could actually take all three of these entries and combine it into one giant entry where you close everything, all the temporaries at one time into retained earnings. So let's next look at the posting procedure. Revenue has been debited, so in the ledger we're going to debit revenue. And this is going to create a zero balance. And then we can close out salaries expense. So that's going to have an $1,800. So you can see $1,800 on the credit, on the debit side too. So this would create a debit balance. And insurance, we closed $100. So we're going to credit $100 and then, whoops, bring down a zero balance. And supplies be credited for $400, and that's going to create a zero balance. And then hopefully last but not least, or actually two more things, a couple more things, we have the interest expense. So if you post that to the opposite side, you create zero. Dividends, we credit it for $400. That's going to create a zero balance. And then rent. Credit rent, and that creates a zero balance there. So once you go back and do your last trial balance to check your math and your totals, what you'll notice is what's left is really your accounting equation. Your permanent accounts are left. We did not touch any of the assets, liabilities, or common stock. And retained earnings, so the question is, what should retained earnings be? If we look down here, retained earnings, we forgot to close to retained earnings. Okay, so if we make retained earnings, let's see, from the trial balance, the original trial balance, of course, retained earnings was zero. So we have what? 6383. I don't know if this will work or not down here, but we'll use it. So retained earnings goes up for revenues, 6383, and it goes down for expenses. I can't seem to do it on the other side, but your expenses is 2310. But it's not letting me do it, so that's okay. There it goes. 2310 is expense. And then we also debit for dividends. So the dividends, if you remember, is 400, which we have a third entry here. So this will be a debit of 400. Okay, we consider this the last T here, the retained earnings. And so if you do the math for this, we have what? 6383, which is the revenue, less 2310, and less 400. So if we make the last T is 3673. 3673 is the balance. So let's plug that in there and let's hope for the best. 3673. 3673. So all the temporary accounts are gone, and then we're back to math. Can't get away from math and accounting. So the debit side will add up. And as usual, the trial balance should balance, but it may not. 17,009. And then you calculate the credit side. So I add up those entries carefully. Whoops. 3673. I get the right number here at least. Uh-oh. We've got 18,600. Let's go back to our totals again. Maybe, actually what I should do is re-add the columns. Let's do that. Easy enough to make a mistake. Got that. 1,017.9. Clear that. And then we'll do the other side. So I'm off by, so if you make an error like that, minus, take the difference between the two sides, and let's see if we can, okay, we're off by 700. Rent expense was 700. Did we forget to close something? Retain earnings, let's see what we did down here. Maybe we made a math error here. 6838 was the revenue. 6383. Oh, that's a classic typo. Transposition, rather. 6383. Okay. So if this happens to you, don't give up. Give it 10 or 15 minutes, and if it doesn't balance, go on to another problem. We don't want you, again, to spend your time just trying to get the math to balance, even if you're a perfectionist. All right, we'll try this one more time. I got 3673. All right, 6383, and that's what we saw up here, wasn't it? 6383. Okay. Maybe I just typed it in wrong. Okay, less, oops, minus 2310. Minus 400. 3673. Well, that didn't do it, did it? 3673. If I compare my two balance sheets, 219.7, maybe I chopped off something accidentally. No. The debit side is 10, 110, 800, 100, 5,000. Oh me, something is not balancing, and I'm not seeing it. One of those nights. Did we leave off a closing? 100, 400, 10, 700, 400. Maybe when I combined the closings I did something. You know what I did? Darn, I left off the rent, it looks like here. When I combine them, so that's the process, if nothing else we can demonstrate what to do when something doesn't balance, but here again, no more than 10 or 15 minutes. So let me try this again. I think this will work this time. Sorry about that. Let me add up the expenses we're closing now that we've combined it with rent. 3,010. Let's try that. Okay, and then we can come down here. That's the closing, 3,010 on this. So we're reducing retained earnings. So again, here's the credit for revenues, debit expense, debit dividends. Just couldn't get the heading to stick on there right. That's okay. And let's do the math one more time. So we have 6383 less revenues, less expenses, less dividends. 2973. Okay, let's hope this is it. If not, we'll do something else anyway. So I just forgot the number. It's 2973. Okay, 2973. 2973. And let's do the total. Hopefully, again, we've got all the stuff on here this time. I sure hope. It's great when it balances, but it's painful when it doesn't. So One more time at the credit side. All right, finally, our trial balance balances and we can live happily ever after here, at least till the next problem, right? So thanks for your patience. We have just finished the accounting cycle, the very last trial balance.